Hello, it is Wednesday, the 6th of May, 2009. This is Brian Shannon from alphatrends.net. We had amazing volatility in this market today and saw an increase in volume here in the NASDAQ. You can see running above the 20-day moving average of volume and largest volume we've seen in about 2 weeks. The NASDAQ did finish with a gain of a penny, so that's 2 days in a row that were virtually unchanged in here. And as I had posted on Twitter, a lot of times big volume without further upside equals distribution. Now, there's nothing still here to suggest that this market trend has been broken or that it's time to sell short, but it really looks like it's in a very dangerous position once again here, and we have to be on very high alert. What you want to do is basically look at this market and either stare at it in disbelief or be quick in and out of these long side trades. But short selling here is obviously still early. The market has not cracked at all yet, even on a 10-minute time frame. We see that the level of 34.50 that we were looking at yesterday did in fact hold. That's where we had prior resistance. That's also where the market met the rising 5-day moving average, and also this trend line right here that we were looking at yesterday. And I had also pointed out actually earlier on the blog today that that's where we had seen the daily S2. So there were a few reasons to look for support down near there. I didn't think it was going to bounce with that type of vigor. I thought it was going to kind of fall short and then maybe fall apart. But we do have a lower high here to be aware of on the 10-minute time frame. Obviously, the 10-minute time frame doesn't give us a reason to be short for a longer period of time. But that lower high that we can see it right here is coming right when this market is very close to this trend line from the beginning of the move once again. So it just makes it very vulnerable here. Again, I'm going to point to well, there's the VWAP since the move began. So even a move down towards that 3150 level, I think it would be very welcome. And in fact, that's the basically the breakout level that we had seen here. That's 3180 or so, and maybe by the time 3150 is met, we'll have that 50-day moving average rise up and meet it as well. But what I was going to go back to say was some of these penny stock plays, like yesterday I was in ARM but sold it because of earnings, but these stocks are just exploding. These are not normal moves here. These are not something to get used to or to expect in this market. Each day they just seem to go crazy in there, and while that's the game that the market is rewarding, it makes sense to play it, but to play it with a very, very disciplined approach that emphasizes getting out instantly as soon as they move against you. And a lot of times that means you're going to leave some money on the table, but the object isn't to try and buy the lows and sell the highs. The object is to grab some nice pieces in the middle and to manage risk so that you're not exposed to a large amount of risk. So I think that this 3450 is going to continue to have significance. Breaking below that will also put us below the 5-day moving average. So we want to keep an eye on 3450 tomorrow. I think in here, the upside we can kind of let take care of itself in terms of if it continues to go higher. There's really not much that we can look for in terms of where's the potential resistance maybe up there. But I think that it's more prudent to play a game of defense right now than it is to be looking really aggressively for long candidates. The S&P 500, amazingly to me, finished right up near the highs of the day. If you look at the intraday action on the 1-minute time frame, we had initially seen the gap higher, which we can see from the 2-minute time frame, a gap higher up above that R2 level. And I'm going to talk about pivots more and more as we move forward. But they're basically mathematical lines, mathematical equation based lines of support and resistance for the market. Potential support and resistance is the way you want to look at it, but it tends to be, like a lot of technical analysis, self-fulfilling levels. Anyways, it had gapped up there, sold off a little bit. We'll switch to the 1-minute time frame. Struggled for direction, and then we had seen a pullback right down to the daily VWAP here at the end of the day, and buyers reemerged once again. Just you cannot argue the logic of the moves. You have to just look at it and say, again, if it doesn't make sense, then then you want to move to the sidelines and just be an observer rather than trying to fight the momentum. And we can put these trend lines and draw new trend lines on top of trend lines to define different trends that we see in this market. Since the rally really began, this trend line isn't as relevant as it is in the Nasdaq. We had seen that the $88 level was an important level of prior resistance. We kind of stuttered right in there, but then shot right higher again. So in the S&P 500, I think that the more pertinent levels of potential support are going to be found probably on the 10-minute time frame, such as today's low right here near about 90 and a half, and then the prior day low right here just above that 89, or just below that $90, and that's where we'll have that 5-day moving average as well. The S&P 500 on the daily time frame looks like maybe it's shooting for that 200-day moving average or the year highs right up in here. We are, again, positive for the year in the S&P 500. Um, is that correct? No, that's not correct. We had finished. Well, let me take a look here. I'm sorry. We finished out last year, the last day of the year, at $90.24. So we are positive on the year. That was I was looking at this candle, but it's on the right side. Anyways, so we are still positive for the year for the third day in a row now. I think it is, and the market just continues to squeeze these shorts. It becomes a game of musical chairs. Who's left to buy and who's going to be left there when they start pulling the chairs away, because it seems like that's what could happen. We had seen overnight the futures put a little bit of a scare into some people, and a lot of people. I think there's still too many people looking for the big break lower. The markets can correct price wise or time wise, and this market just refuses to break lower. And again, one of the better clues today that the market wasn't really giving up ground was the advanced decline line. That basically it was positive all day long and strengthened towards the end of the day after the stress test information was released. We saw a little stutter there, but again, you have to be impressed with the resilience of this market, and it just really seems as though it's bulletproof, which to me gives us more reason for concern than anything. It doesn't mean that there's a lot of people chasing this market, feeling left out, feeling as though they're missing the boat. And if you're not making profits in this market, it's because you haven't been a believer in the rally, and you have to believe what you see. You can't look at the news and the headlines and say everything's bad. You have to look at it and say, where are we? What are the important levels? In the Russell 2000, the biggest potential level of support right now is found down near that $48 level. We're up at 50 and a half. We're possibly making a run for the year highs in the 200-day moving average, just above $52 a share. So it's not over yet, but boy, it sure seems like it's running on fumes up in here. Today we did see heavier volume in here, and we saw a red candle, which means the market closed lower than where it opened, and we can see that it gapped right up, and this market didn't recover as nicely as the S&P 500 did, but it did manage to hold above the daily VWAP in here. So a little bit of reason for a little bit more concern in this market and the Nasdaq, but 49.5 is a important level that I think if we break that 49.5 level, we're going to have a broken trend line. We're going to have a market below the 5-day moving average, and we're going to see a lower low from the last almost 3 days if you don't count these first 20 minutes in there. But that 49.5 level is the more important level of support that if broken, you want to become very defensive towards this market. The financials, finally, let's look at those. They were up 92 cents, another 7.9%. We got some stress test news that started flowing out right about here. People bought the banks, and you can't argue with why they were buying them or what the logic is. The fact is they were bought, then the stocks, they sold them off right down to the daily VWAP and then bounced very strong once again, continuing to put massive pressure on the short sellers in here. I see a lot of people trying to pick the tops in here, and it just so far it just doesn't make any sense. This prior resistance from the morning did act as support on that pullback as well. We can see that basically right here, and that's where we had the VWAP. So resistance broken became support also at that VWAP. The more times you can find some correlating information, that is information that gives you the same conclusion in the same area, that is, so resistance is supposed to be support and it's also the location of the daily VWAP, then it makes a little bit more sense to think that maybe it would bounce there, just like we saw in the NASDAQ today with that trend line, the 5-day moving average, the prior resistance, and the daily S2. So those levels, when we have a confluence of technical factors coming together in one place, giving us the same conclusion, they tend to be more reliable because you have more eyeballs basically focusing on the same levels than you would if it was just from one technical indication, and that just adds further credence to that level because less people. Let's go back to the Nasdaq for a moment. Less people decide to sell in here, especially given the magnitude of the sell-off. They say, well, it's down to this 5-day moving average. It's down to this prior little level of resistance. It's down to the trend line. Let's stop selling. Other people start saying, let's start buying, and we have that supply and demand equation start to find the equilibrium in there from where that bounce begins. And again, that was also pretty much nailed the daily S2. So basically overall on this market, the financials, they're continuing higher. We've seen them power past the 1130 level this week, and perhaps they're heading up for the year highs as well. They're very close right now. It's up at about 13 bucks, and we've got a declining 200-day moving average in there. It's not a market for people that are looking to buy and hold. I don't think, because eventually we're going to see this market give up these gains. But that's opinion. That's not what this chart is telling us right now. This chart is telling us that the trend is higher, and if you're selling short, you are wrong, basically.